If your renewal letter just made your jaw drop, you're not imagining it. The average US auto premium climbed roughly 12 to 22% again this year, depending on your state. Repair costs are up because cars are essentially rolling computers now. Sensors in bumpers cost a fortune to replace, and severe weather claims keep stacking up. Here's the honest part most YouTubers won't say. There is no magic trick that gets everyone cheap insurance. But there are 5 or 6 levers that genuinely move the number, and I'm going to walk you through every one of them in plain English. Before you shop, you need to know what you actually have. Log into your current insurer's app and download your declarations page, sometimes called the deck page. This is the one-page summary of your liability limits, deductibles, and any extras like rental reimbursement or roadside. Most people quote new coverage blind and end up comparing apples to oranges. When you have your deck page in front of you, you can match coverage exactly, which is the only way a quote comparison is honest. Take a screenshot. You'll reference it 3 or 4 times today. Industry data consistently shows the same insurer is rarely the cheapest for 2 different drivers, so loyalty almost never pays. Get quotes from at least 5 companies. 1 large national carrier like Geico or Progressive. 1 regional like Erie or Auto Owners if available in your state. 1 direct-to-consumer like Root or Lemonade, your current insurer, and 1 through an independent agent who can quote 10 more in the background. Use the same coverage limits across every quote. If a site asks for your phone number before showing a price, use a secondary number, because the spam calls are real. Going from a $500 deductible to $1,000 typically saves 10 to 15% on your collision and comprehensive premium. That's real money. But here's the honest catch. Only do this if you can comfortably write a $1,000 check tomorrow without stress. If a fender bender would wreck your budget, leave the deductible alone. A cheaper premium means nothing if you can't actually use the policy when something happens. This is a math decision, not a marketing decision. Most cheap insurance advice tells you to drop coverage. I'm going to push back on that. State minimum liability in most states is dangerously low, sometimes $25,000 per person, which 1 ambulance ride will blow through. Keep liability high, at least 100, 300, 100, if you can swing it. The places to actually trim are rental reimbursement if you have a second car, roadside if you already have AAA, and full coverage on a vehicle worth under about $4,000, where the math stops making sense. Trim smart. Don't go naked. Discounts are quietly where 5 to 25% of your savings hide. Ask every insurer about multi-policy bundling with renters or home, paid in full discount, paperless and autopay, defensive driving course completion, often a $50 online class for a 5 to 10% break for 3 years, good student, low mileage if you work from home, and affinity discounts through your employer, alumni group, or credit union. None of these are guaranteed, and they vary wildly by company, which is exactly why you have to ask each one specifically. Programs like Progressive Snapshot, State Farm Drive Safe and Save, and Allstate DriveWise monitor your driving through an app or plugin. If you're genuinely a careful driver who doesn't speed, brake hard, or drive late at night, you can save 10 to 30%. But, and this is the part the ads skip, some programs can also raise your rate if you score poorly. Read the fine print on whether the discount is one-way or two-way before you enroll. For most calm daytime drivers, it's worth it. For DoorDash drivers, probably not. In most states, insurers use a credit-based insurance score, which is similar to, but not the same as your FICO. A weak score can quietly add 50% or more to your premium. Paying down credit card balances below 30% utilization, disputing genuine errors on your report, and not opening new accounts for 6 months before you shop can meaningfully move this number. California, Hawaii, Massachusetts, and a couple other states ban this practice. If you're there, skip this step. Everywhere else, this is the slowest lever, but often the biggest one. This is the step almost nobody does, and it's the single highest ROI habit in personal finance. Insurers use complex pricing models that change constantly, and the cheapest company today often isn't the cheapest in 18 months. Put a calendar reminder for 2 weeks before every renewal. Run the same 5-quote process. If your current insurer isn't within 10% of the best quote, switch. There's no loyalty bonus in insurance. There's actually a quiet penalty called price optimization in some states, where long-term customers get charged more.